Welcome to CEO Interviews, a production of Gore Call, in which we take the time to speak with small cap executives, catch up what's going on with their companies. Today, guys, if you love the metaverse, if you believe in the future of the metaverse, then you're going to love this interview with tokens.com. One tidbit of information. They've got an 8-figure metaverse real estate portfolio alone and all sorts of other digital assets. So you're going to love this. You can see them on the screen. Andrew Kegel, CEO and co-founder of the company. Guys, as you all know, investors all over the world have seen the rise of Web3, and that includes metaverse, blockchain, NFTs, tokens, and cryptos. Yes, there have been corrections in a lot of those, just like we saw back in the dot-com days. But the fact of the matter is the rise of Web3 is undeniable. We see the increase every day. We're seeing announcements about metaverse and all sorts of developments in Web3. Why is tokens.com so important to everybody? It's a publicly traded company that invests in Web3 assets, builds business linked to crypto staking, the metaverse, and play to earn gaming. So what does that mean? Because a lot of you may understand that, that's exactly why tokens.com is important to you, because it gives everyday investors a chance to participate and invest in Web3 without having to try and educate and get caught up on all of that, because a lot of times it's so difficult to understand that people just kind of give up. The company raised $12 million last year. Like I said, they got an 8-figure metaverse real estate portfolio. Cash and digital assets are between $17 and $20 million. That doesn't include Metaverse Group and Hulk Gaming. And as a vote of confidence, insiders own approximately 24% of the company. There's so many things we can talk about. You know they're a winner because of that introduction. Andrew, welcome back. Let's talk about the company.
Thanks, George.
Let's talk about, you're one of the foremost experts on this because you've been on CNBC, the Wall Street Journal, CNN. Everyone refers to you to talk about what's happening. Before we go into tokens.com specifically, what's the Web3 macro situation look like? Because some people are seeing falling price and thinking Web3 is over. You and I both know different. What can you tell us about the big picture in Web3?
Yeah, there's certainly a dislocation between the market perception, the capital markets perception, and the development that's going on in the space. If you look last year, there was about $33 billion invested into Web3 projects. This year, it's about $20 billion year to date. If you just follow the money and you see that all of this money is being flowed into, Web3 new companies, infrastructure, these companies over the next few years are going to come to fruition, and they're going to start providing value-add products and be growing. The next Amazons, Microsofts, and Facebooks are being built today, regardless of what's happening here, because right now, let's face it, the world is in a little bit of a volatile state given the war, inflation, energy crisis, climate change. And so people are unsure as to how to invest.
And risk is off, just to interject there. Usually they run to very secure things and risk is off because we've seen big tech and a lot of that category has seen pullbacks.
Totally. And we've been suffering from that, as have a lot of other technology small caps, and even large caps have been suffering. We talked earlier, even, Meta, Facebook is off by 62% year to date.
Yep.
And so it's a tough time to be running a public tech company. But again, let's take a step back. Let's follow where the money is going. Let's take a look at, as an analogy, what happened back in 2000 when the internet bubble burst. That didn't mean that the utility of the internet had gone away.
Right.
It just means that there's a revaluation of the assets. There's a revaluation in terms of how people are thinking about this. And it's a little bit about weeding out the weaker players. And I think that's what's happening today.
Yes. Yeah, well, back in the dot-com crash, you and I were there for both sides, the good times and the downfall. There are two main pretenders. George Bucks, now in the metaverse world, George Bucks comes along. I've got a token offering. People get excited. I promise them. Same thing happened back then. We went through a catharsis, then a bit of a lull, and then what people realized what you said, the utility hasn't gone away. They just want to see companies building real solutions for the internet. And hence Amazon, LinkedIn, Facebook, and all those start to come along. Is the same thing going to happen in terms of Web3? And that's a perfect segue into the 3 business segments at tokens.com and what you guys are going to be building.
Well, look, I think if you do the research, it's fairly easy to connect the dots here and see that this is going to have a profound effect on how technology is done. And I've said many times in the past This technology is going to impact and disrupt every single type of consumer technology. I think, the younger generation today is going to have a digital wallet before they have a bank account. I think, in terms of thinking about the utility of things like the metaverse and how that's going to evolve. I mean, look, one of the largest companies in the world did a complete pivot, Facebook, into becoming a metaverse company. If you look at every single major corporation in the world, from Apple to Microsoft, now to Walmart, to every single fashion brand, all have metaverse Web3 strategies. Again, I would encourage people, take a step back. If all of these companies are investing time, energy, and money into these areas, if Wall Street and Silicon Valley are pouring their money into this area, it's just a matter of time before we see that trickle through into, different impacts in our life.
In tokens.com, you got multiple business segments.
Yeah.
I don't know if you want to go through in order of which ones you're most excited about, or go through each one, but let's talk about the three segments and what's going on in each one.
Sure. And tokens.com was created to provide public market investors with exposure to these areas, because frankly, they're hard to get exposure to, hard to understand. There's a deep learning curve, and the things we're doing are beyond what any individual could do. And so we're a public company. We own Web3 businesses that are anchored in assets. And that's important. We're not trying to create something from scratch and hoping that it gets to, some kind of fruition. Every single one of our three businesses is revenue positive and anchored with assets. That's important. So we'll walk through the first one, our staking business. So staking is the clean energy alternative to crypto mining. Everybody probably heard about Ethereum after the merge converting to proof of stake. Well, that's one of the things we do. We get paid in additional tokens to basically process blockchain transactions. So in the case of Ethereum, every time an NFT trades or something happens, there's a fee paid to Ethereum, and Ethereum then needs to pay a fee to stakers like tokens.com for their assistance in processing these transactions on the blockchain. So that's one business. And that business right now has, in Canadian dollars, $12 to $13 million of liquid tokens like Ethereum, Solana, and DOT. That's step one, revenue positive business. Number two, we got into the metaverse area, and we did that by acquiring Metaverse land last year. Metaverse Group has an 8-figure portfolio of digital real estate across 12 plus metaverses right now. So over 12 metaverses. We're agnostic.
And over 750 parcels.
Over 750 parcels in these different areas. So what are we doing with that? I think we're one of the only companies in the world to take that line of business and create what is really an e-commerce business. Ecom 3 is what we call it, where we help brands integrate into Web3. We put in a press release a couple of weeks ago that our land in Decentraland is fully leased out. That's incredible. We have over 80 clients that we're working with right now to do anything from creating an immersive experience to gamifying their brand, to renting them land, to creating NFTs for them. And we can talk about Skechers, Forever 21. We have a few big ones that we will be announcing in the next few weeks with major financial institutions, a major accounting firm, major loyalty programs. We have so many interesting things in the works. And again, Metaverse Group, creating revenue. The revenue is not tied to the performance of the capital markets or to the performance of crypto.
It's a real business. It's a real business.
It's a real business.
You're not hoping people get to buy George Bucks and hope that it goes from 50 cents to $5 and try and make some money there. You're building a real foundation that other big companies want and need.
We continue to build it, but it's built. Like I said, it is a revenue positive business. Think about that. We started that business about a year ago, and we're already revenue positive and have a bunch of assets anchoring that. We're continuing to hire people there, account managers, because we honestly have a hard time managing the inflow of calls that we get and the work that we need to do there.
Okay, that's awesome. That's awesome.
Hulk Labs is the third area, and Hulk Labs is our view that, there's over 400 million video gamers every day, yet there's only about 1.5 million gaming wallets. And so what we're starting to see is this migration from traditional video gamers to Web3 games, which allows them to play and earn rewards that can be translated into fiat. What we've done there is really exciting. Again, another revenue positive business anchored in assets. We use our capital there to purchase gaming NFT assets. We have basically an army of players in Africa, over 1,000 players that are playing these games for us and are earning on our capital between 20 and 23% per month return on our capital. Okay, think about that. Another revenue positive business based on assets where we're continuing to add, we're adding hundreds of players a month. Our goal is to get to 10,000 players, and each one of these are playing games for us. We pay them a commission. They get a very attractive salary for their native country, and we keep the profits. That's a huge business because we actually do the analysis.
Where does the revenue come from, Andrew? So people really understand that. Does it come from George Calm because we're sponsoring these games or they're playing my games? Where's the revenue come from?
So the revenue works like this. As an example, Axie Infinity is the largest play to earn game in the world. They're called play to earn games. So you would go in and you would purchase swords and shields and things that would build your avatar to play this game. If you are successful in playing the game, you're paid in additional tokens from that ecosystem. Those tokens, which are Web3 based, can then be sold and converted to US dollars. So that's how we make the money. So we have all these players, we train them on how to play. We actually have a deal with the Democratic Republic of Congo, who's providing them with software, hardware, all the things that they need in Wi-Fi, because they're trying to build Web3 blockchain type jobs that are high paying in their country. They play the game for us. We take that, we convert it to US dollars. They get a portion for themselves and we keep the balance. So the game itself is what's generating the revenue for us. Here's the other interesting thing that we're going to do there. Everyone is familiar with the Uber model, connect passenger to driver. What we're going to start beta testing soon, and we have a whole bunch of family offices and institutions lined up to want to work with us, where basically, as we continue to scale our player network into the thousands, which we're already in the thousands and continues to grow, we're going to have excess playing capacity that we're going to be able to sell to investors. So if you're a family office or a gamer or an institution, you're like, okay, I would like to get exposure to something completely uncorrelated to capital markets. We can essentially rent out our player network to you, connect you, and just like Uber, we'll collect a commission for the earnings that are made from those players. So a portion of the earnings will go to the player, a portion will go to us, and then the portion will go to the investor who's putting up their capital for these gaming assets. That's an entirely new asset class that's never been done before. And we're getting calls from VCs and investors.
Yeah, what do you call that? Because that's more than just play to earn. That's capacity to earn, invest to earn, and it's almost invest to earn.
Well, it's amazing because there's, like I said, all of these billions of dollars that have been invested, a lot's going into gaming. So there's these new play to earn games that come out every week. And they're contacting us because they know we can provide liquidity, do all kinds of things. And so we're finding ways to make a profit from existing Web3 video games. And we're building, like I said, this army of players who play the game for us for a profit. And that right now in our capital is returning, 20 to 23% per month. It's pretty incredible. It's an entirely new asset class. So we're not only eating our own cooking by using our capital there, but soon we'll be launching beta with family offices and institutions to get them in there as well. We're also having conversations about launching a play to earn fund so that people from an offering memorandum can get there and collect returns as well. So
let me ask you for a second, Andrew. Let me just interject for a second. So that's amazing. Okay, the staking side is more passive, right? But Metaverse Group, you talked about all the leases and the brands you're working with. You just went through Hulk. How are you guys getting the word out there? Because the great thing about tokens.com that I want everyone to understand is there's GeorgeCom tokens and we're talking to big game and we got these big ideas, but we're not succeeding in the business world. There's nobody's really paying us for anything. So we're just floundering. And then there's tokens.com, which has real solutions, but you're actually attracting B2B. You're attracting, clients who rely on you. How are you guys getting the word out? How's the world finding out about you? Because clearly you guys are kicking ass with that.
Well, we're continuing to put out press releases. We're trying to, do things like this interview where we're trying to communicate the things we're doing. Like I said, we have 3 solid businesses that are all revenue positive, anchored in real assets. We're trying to get the word out there. Like I said, from a valuation perspective, you just take our staking assets and our cash, which is all publicly disclosed, that's pretty much equivalent to our market cap right now. So we're trading at almost like our cash and liquid token value. That gives zero value to the Metaverse Group digital land that we hold, to the value of a Metaverse business that we're building there, or to Hulk Labs and what we're doing there. And so at today's prices, you're essentially getting the businesses free. I think we're
businesses for free.
Yeah.
Zero.
I think we're incredibly undervalued, but back to what we were saying, this is an incredibly tough time. We're well capitalized. Management team actually owns closer to 25%. I did the look this morning. So we're invested in the fastest growing, I think, most important areas of Web3. We have revenue positive businesses. We have an aligned management team, and we're well capitalized and have the ability to fund ourselves for the next few years without going to the market. It's just a matter of us continuing to talk about it. But, sometimes I feel like it doesn't matter what you do. There's just a lot of, the overall sentiment in the market, especially for small cap tech, is negative today. There's no question. And so for us, it's I think this is a great buying opportunity for people. We'll continue to, ride out the storm. And once this turns, I think we're going to be well positioned. I don't know how our peers in the public realm are doing, but I see a lot of them are issuing equity at, very low market caps and diluting.
No, there's pain out there. Facebook's down 62%, like we said. So there's Shopify is down, I don't know, 75%. So there's pain, but the most important thing is that what's happened in the capital markets has almost no effect on what's going on with the operating side. There's a massive dislocate there. And by the way, if you remember, and maybe we'll flash on the screen because we'll find this after the interview is done, but Jeff Bezos had a very famous quote back when his stock got beaten to hell during the dot-com crash, where, paraphrasing, he said, hey, if you believe what's going on in the stock market is what's happened with our business, then you deserve to not participate in the future growth because our operating side is kicking butt. So is it fair to say, Andrew, that the business of tokens.com has never been stronger than it is today?
I totally agree. We've never owned more tokens. Our revenue generation continues to grow beyond where it was last year. Last year we had a $400 million market cap. Today we're down to 16 million. I mean, there's a massive dislocation here between how the operations and the business is going versus the market perception, which is really just in panic mode right now.
What is the demand like? So obviously you're getting the word out there because of when you have these discussions with, so well beyond GeorgeCom, when you're talking to big companies, do you see them, how do you see their appetite for Web3, for Metaverse, for play to earn and gaming and all these different solutions? Is it ferocious? Like you excited about it, or they still have to be talked into it?
When I tell people about the different things that we're doing, I think everybody gets excited. So very similar to what we did now, but even into more depth where we dive into the numbers. I think people get very excited. I think, whether it's institutions or family offices, there's a huge degree of interest there in what we're doing. And as a way to play the growth in Web3, because again, we're different. A lot of companies will say, oh, we're building a token, and if we reach critical mass or if we do this, I've always taken a different approach, which is, let's utilize the assets, the Web3 assets that are out there. Let's utilize other people's success, other people's assets that we can buy, and then find ways to generate revenue off it. And that's very clear in our Metaverse group, where we own all this digital land. And rather than just sitting on it passively, we have found a way to make that into a profitable business where, again, we have like over 80 clients, a ton waiting to work with us, where we're creating these virtual experiences, virtual stores, virtual events. Pretty soon we'll be talking again about the Metaverse fashion show, which took place this past March. That was hosted on our land and attracted over 100,000 unique visitors. Think about that, 100,000 unique visitors to an event. That is an advertising opportunity. That is a retailing opportunity. There's a merchandising opportunity. The way brands are looking at this stuff today is different than when we were young. Advertising on, commercial cable TV is not the way to go. This is how brands are positioned. I sat on a panel a couple of weeks ago with Walmart. Walmart is the largest retailer in the world, and they just launched a metaverse within Roblox. What does that tell you? I mean, every single large organization is pointing the way for us here. The market is dislocated.
And I'm making a point of that Walmart quote just to make sure we have it for later. So is it fair to say that you're nothing but bullish as far, because some people will say, the Metaverse, I want to address that as a final question. I still talk to some people who say, either I don't understand the Metaverse, or I think the Metaverse is ridiculous. It's never going to happen. Well, how do you, because I know how I explain and tell people, and usually within 2 minutes, I've changed their mind. What do you tell people when they say, nah, Andrew, people aren't going to go to the Metaverse. They're just going to go to GeorgeCom and scroll through, e-commerce, how to to buy this cup or whatever the case is. They're never going to change.
Yeah, there's a lot of ways I would address it. So if you look at the early days of the internet, when the first browser was established in 1992, people were like, what do we do with this? This was pre-Wi-Fi or anything. But 7 or 8 years later, Wi-Fi was introduced, and then better browsers, and then the ability to do all these things. We're at the very early stages of this. But again, just look at where the money is going. Walmart, Apple, everybody is engaging in this area. And for people who don't think that the metaverse is here, let me give you some quick statistics here. Roblox has 200 million users per month.
I know.
Minecraft has hundreds of millions of people signed up. They're hosting shows, like all the musicians, everybody is doing stuff in the metaverse today. Like, it's happening. As these kids get older, I said it before, they're going to have digital wallets before they have bank accounts. That's important. This is about the future, but it's actually here today. I don't know if you have got kids. My kids every day come home and like, can we have some more Robux? This is where kids go to meet and socialize. This is where they're learning about brands, where they're understanding, what's the difference between Gucci and Gap. They don't go to the mall anymore. I grew up going to the mall. That's how I learned about, what to shop and what different
walk
brands.
to Fairview Mall.
That's right. Today, my kids don't even know what the mall is. They go into these metaverses, they play, and there's advertising and gamification, different things that are going in. That's why Walmart's going in there. They're trying to get into sort of, brand themselves as a Web3 company with the youngest consumers, or the people who are going to be their biggest consumers in the future. It's already happening. I think it's naive, and it's akin to sort of dismissing the internet back in 2000 to be dismissing the impact of the metaverse in the future. And for people who, again, it's developing, but this is really the future of social media. It's the future of online shopping, gaming, finance. Think about the metaverse as sort of the various platforms that operate on it as a way to deliver different experiences to people, a different way of using the internet.
Andrew, I'd ask you what else is to come, but it sounds like there's a lot coming. I can't wait to have you back, because you and I could sit here and speak for an hour about all this. But the two most important things I want to get across that you've gotten across, I want to summarize is: one, tokens.com is the vehicle for traditional investors, small cap, large cap investors who want exposure, all this, but say, I don't know what a metaverse is. I don't know what a Roblox is. I don't know what Decentraland and Sandbox is. I just want exposure to it. So one, that's critical, and you've proven that. And two, you guys are real. I don't want to say you are the Amazon, because I don't want people to think but I'm going to say you're in that same category, which is there may be a dislocate with the market, the capital markets, for reasons that have nothing to do with you: inflation, war in Europe, energy crisis. But you guys are real. You got real customers, real revenues, 3 divisions, and they're each growing. So for everyone at home that's watching or listening on YouTube or listening by Spotify, I cannot wait to see what tokens.com becomes the next 5 years. And I'll leave last words to you.
No, thank you very much. I mean, it's exactly right. Like I said, we're trying to build real businesses anchored by assets that give people exposure to the most important categories in Web3. And like I said, right now we're trading at very cheap values equivalent to our cash and token value. So, a lot of upside here for the future.
Thanks for joining us, Andrew. I'm sure it's October the 19th. So I'm sure we're going to have you back, because by what your own words, it looks like more announcements are coming. But thanks for joining us today, because everyone who loves the metaverse and Web3, this is exactly what they need to hear. Thank you, my friend.
Thank you.
For everybody at home, you've been watching or you've been listening by podcast on Spotify, Google, Apple, your favorite podcast platform. To Andrew Kegel, he's CEO and co-founder of tokens.com, trades in Canada under COIN coin. For our friends in the US, SMURF, that's right, that spells Smurf. For those of you new to the story, because there's so many things going on, get to their profile page on Agoracom. We've simplified the message there, broken it down so you can understand tokens.com, because we know a lot of you are still trying to wrap your minds around it. And then once you got that knowledge, get over to tokens.com, do your deep dive due diligence, because you believe in the future of Web3 and the metaverse. You got to look at tokens.com, and I won't say anything else. Thanks for joining us. Have a great day. See you next time.
Thank you.
Hey guys, this video is over, but don't forget to help your company by liking it and even leaving a comment below. And then don't forget to help yourself by subscribing to our channel and never missing another great Agoracom small cap video.